If you opened your app today, looked at the crypto charts and thought, great, Bitcoin is dumping again, don't scroll away yet. Because if all you see is a red candle, you're missing the most important part of what's happening. In the next few minutes, I'm going to walk you through the data behind that red candle: dominance, flows, stablecoins, and macro liquidity. And if you stay with me until the end, you will understand where this market really is right now. Better than most people shouting on social media? This is not another "I think Bitcoin will go to X" prediction video. I'm not here to sell hopium or doom. I'm going to show you what is actually happening right now in the numbers. And I'm going to make you one simple promise. If you watch this video from start to finish, you'll walk away knowing whether this move looks like the beginning of a crash or a normal bull market reset, whether alt season is real or just noise, and whether money is still flowing into crypto or quietly draining out. If you trade or invest with real money, that knowledge is worth staying for. Let's start with the heart of the market, where capital is flowing. When we open up the dominance data, the story changes completely. Bitcoin dominance is drifting lower. Ethereum dominance is grinding higher. The share of the market held by altcoins as a group, everything that isn't BTC or ETH, is also increasing. And the ETH/BTC ratio has broken to the upside. In plain English, big money is slowly rotating out of pure Bitcoin exposure and down the risk curve into Ethereum and the broader altcoin space. If you look back at previous bull cycles, this pattern is very familiar. First, Bitcoin runs hard and pulls everyone's attention. It sets the trend, drags the entire market off the lows, and makes the headlines. Then, at some point, Bitcoin starts to cool down. It chops, it pulls back, it looks tired. But at the same time, altcoins stop bleeding and begin to hold their ground. After that, the baton passes. Liquidity rotates into alts, and they start taking the spotlight. The data we're seeing right now matches that middle phase almost perfectly. Bitcoin is breathing. Ethereum and the rest of the market are quietly stepping forward. Now let's address the part that's freaking people out, the drop on the Bitcoin chart. Yes, we've seen a move down of 3, 4, maybe 5% from the recent highs. On a candlestick chart, especially on social media, that looks dramatic. People love to zoom in, screenshot the worst possible time frame and scream, "Top is in." But when you zoom out to the total market, the picture is much calmer. The total crypto market cap, excluding Bitcoin, has only pulled back slightly. The combined market cap of altcoins, especially when you strip out both BTC and ETH, is basically holding its level. That's a crucial point. If this were the start of a true breakdown, you'd expect to see everything bleeding at once. Bitcoin, Ethereum, majors, small caps, the entire space. Instead, what we're seeing is Bitcoin doing a completely normal bull market correction, flushing out leverage, shaking out weak hands, resetting funding, while the broader market quietly absorbs it. There is no evidence of a mass exit, no sign that everyone is dumping their bags and running for the hills. The behavior looks like a rotation and a reset, not the beginning of a structural collapse. Now let's talk about one of the most misunderstood charts in crypto: USDT dominance. On the surface, when stablecoin dominance is rising, it looks bearish. The easy narrative is, everyone is scared, so they're hiding in dollars. That interpretation can be true, but only in a certain context. If we saw stablecoin dominance spiking while altcoin dominance was falling, while the total market cap ex Bitcoin was getting destroyed, that would indeed look like fear and capitulation. But that's not what the data is showing right now. Instead, we have stablecoin dominance ticking higher, while altcoin dominance is also rising, and while the total altcoin market cap is not getting smashed. Put those pieces together and you get a very different picture. Money is not running out of crypto into the banking system. It's coming into crypto from the outside world and parking in stablecoins, waiting. People are wiring dollars to exchanges, loading up USDT and USDC, and then sitting on the sidelines looking for entries. That's dry powder, not capitulation. And that's exactly what you want to see if you care about the next leg of the cycle. A real bull run is not just the same old money rotating between coins. It needs fresh capital. Rising altcoin dominance plus a growing stablecoin stack, while total market cap holds up, is a classic sign that new money is arriving and positioning itself. Most people never look at this combination. They just see USDT dominance up and assume fear. If you've stayed with me to this point, you already understand more than they do. Now, before we wrap this up, we need to zoom out even further and look at the macro picture, because crypto doesn't move in isolation. What really drives the giant waves in this market is global liquidity, how tight or loose money is in the system. Recently, we've started to see early signs of expansion again. Broad money supply in the US has been turning higher. The dollar index has been losing strength, which historically is supportive for risk assets like tech and crypto. Financial conditions are not in emergency ultra-tight mode anymore. They've shifted toward a looser, more risk-friendly environment. At the same time, the real economy is flashing mixed signals. Layoffs ticking up, growth numbers coming in softer, more talk about slowdown and recession. That sounds negative, but markets hear something else. If growth is cooling, central banks will eventually have to back off from aggressive tightening. Maybe not this month, maybe not next, but the direction of travel is toward easier policy, not tighter. And history is very consistent on this point. When interest rates peak and start to roll over, liquidity flows back into the system, and risk assets, including crypto, tend to catch a strong new wave. Put all of this together and the big picture becomes clear. On one side, you have a visible correction in Bitcoin that looks scary if you only stare at price. On the other side, you have Ethereum gaining share, altcoins holding their ground, stablecoin balances growing, and macro conditions quietly shifting in favor of more liquidity over the coming months. That is not the profile of a market at the start of a crash. It's the profile of a market where the spotlight is beginning to move and new money is lining up behind the scenes. So here's the frame I want you to leave with. What you're seeing right now is not the death of the bull trend. It's a change of roles on the stage. Bitcoin is taking a short break. Ethereum and the broader altcoin space are starting to step under the lights. Fresh capital is entering through stablecoins, and the macro backdrop is slowly preparing the ground for a bigger liquidity wave down the line. Most people will miss this because they only watch headlines and red candles. If you've stayed with me all the way to the end, you're not one of those people anymore. The next step is to use this map intelligently. In how you choose sectors, how you size risk, and how you time entries instead of chasing emotion. In upcoming videos, we'll break this down further into specific themes and types of projects that tend to benefit most from this kind of rotation. For now, remember this: the market is not in runaway mode. It's in read the flows correctly mode. The traders who survive this phase are not the ones staring at the waves. They're the ones tracking the direction of the tide.